Good morning, traders. Hope you guys are doing well today. Super excited you're here. I wanted to take today to go over some trading rules I've placed for myself. Now, these are going to be independent of each one of us. These may not apply to you directly, but this will at least give you the opportunity to see kind of the rules I placed for myself and maybe some that you can add to your arsenal as well. Now, why do we have trading rules? See, we don't need rules in place for things that we already do. You don't have to have a rule for me to tell me to trade because I already know I'm going to trade. You set rules to prohibit yourself from doing things that are not good habits in trading and things that you'll realize and figure out about yourself along the journey. But your trading rules need to be tailored to you because we're going to have different struggles. But ultimately, one of the things I've seen that has created very successful traders, highly successful, is discipline. This can all be boiled down to discipline. While looking over millionaire success habits, one of the number one things they do each and every day is what? They make their bed. Now that may sound pretty trivial, but it all boils down to discipline. Those that are willing to eat, sleep, and trade so that you don't have to eat, sleep, or trade. No, I'm just kidding. Let's go ahead and take a look at the rules. Now, I'm very interested to hear some of the rules that you guys have tailored to your own trading styles. Please leave some of those in the comment description below. Let's take a look at these. Number one. My first rule on here is no trading in pre-market or after hours. Now, some of you, that's a rule that doesn't apply because a lot of you out there trade pre-market and after hours and you trade it very successfully. But for me, it's been illiquid. I personally have not seen very much success trading pre-market or after hours. And risk kind of gets blown out the window for me. So I'll be in a trade and then a stock comes out with an offering and it's always in pre-market or after hours and the thing drops points. It's just never been good for me. I'm always on edge when I'm trading pre-market or after hours. I just don't like it. I feel like I don't have very much control over the trade because it is pretty illiquid. So I just completely avoid those. I've had some big losses, so I said, you know what? I'm done with it. All right, that's number one. Number two is no low floats. Now, I have seen success with low floats. I've had some of my biggest winners on the low floats. In fact, my biggest winners are the low float stocks. But it was very difficult for me to find consistency with them. Now, you guys have seen me over the last month. I've been highly consistent, and it's because I'm doing what works for me. And low floats is not part of that recipe. So I took it out of the recipe book, and I've been doing very well. Now, those are stocks I'll watch, but I really don't get eager to trade them because I've traded them before. I know how to trade them. I've been successful. I've also seen big losses with them. But the thing is, I never had consistency like I do now. It was always up and down with the low floaters, so I just eliminated them altogether. It's about eliminating these things that do not push you forward into becoming the day trader that you want to be. Now, you guys have to understand that each and every single day in the market that you're trading, you're becoming the trader that you will one day be. You may not be seeing the results right now. You actually may in fact have a red day in a lot of them. But you're becoming the trader you will one day be. And that's very important for you to understand. Always keep that in mind. So number three is no predicting, no bias, only reactive trading. Now that kind of goes hand in hand with the low floaters. With a lot of those low float stocks, I would try to predict kind of what chat room is going to pump what. Now I got pretty good at it. But still, I'd be getting in trades that had no volume with maybe a good PR, a good past chart history. Sometimes they would explode because one of the chat rooms would come in, but other times there would just be no volume. It'd be a liquid and I'd get dumped on. The stock would just start fading on off. It's just, I don't like predicting. Predicting is for amateurs. Professionals just want to make money. Something I had to realize, and again, the reason you have rules is to keep you from doing some of these stupid things that you do in the past and that you have a tendency to want to do. See, when I wake up in the morning, I see some of these low floaters in pre-market, I do get a little anxious to want to trade them. And so I have to have a rule not to trade them. And so I haven't been trading those. Number four, no comfortable trades, only high intensity. So I've only been buying fear and selling euphoria. So stocks that are getting emotional in either direction, taking advantage of those emotions, whether that's on the panic or whether that's on the FOMO. And because you're getting in on the emotional side of the trade, I personally don't do the single entry, single exits. It's way too emotional. And we're going to get to that right here. Number five is no illiquid spready stocks. No illiquid spready stocks. I don't like those guys. You know, you get into them and you may end up risking a lot more than you want to. It's just hard to get in and out of. So we just made a rule. If you see one that looks good, even if you want to trade it, it's looking very, very good. Kevin, come on. You know you want to take it. I have a rule. I just got to follow rule number 5, not to take it. I've had some disastrous trades trading those illiquid spready stocks. Number 6, No single entry, single exit. Start a quarter position size. And this is amazing, guys. This is one of the game changers for my trading, is not to do single entry, single exits. Now, I know this is a little controversial. I know that some of you only do singles and single exits. And this is a rule that does not apply to everybody. But it really has impacted my trading. It's really helped because I don't have to be exactly right. Now the thing with that is, I don't necessarily cut a loser right when I'm red. Because what's the saying? You're either right or you're right out. But because I'm getting in usually on the emotional side of the trade, most of the time, 99% of the time, I'm red right when I get in it. My first entry is usually when it feels right, when the stock is really getting overbought or oversold. Second entry when it's even better. Third entry, even better. And then the final, in which I usually never get to, is when it's perfect, when the stock is right. And at that point, you really have a nice solid position. That's when you have full position on the stock. It allows for maximum profit potential. But what's the risk? The risk is a dollar amount. So for me, we're going to get to that. It's 3x what I try to make every single day. And that leads me to rule number 7. No more than 3x max risk. So let's say I'm going for $100 a day. 3x would be $300. That's what I'm not going to lose. Now, if you have really good consistency, 90% or higher, this is going to be completely fine, because if you make $100 a day, that's $2,000 a month, and you have just like 1 or 2 days where you're maxing out at $300, you're still making what, $1,700, $1,400 on the month. The risk per trade for me is going to be a dollar amount most of the time. It's not necessarily going to be high of day, although if I get a second or third ad and then we form a high of day there, I'll take a partial, and then the rest I'm going to leave to work for me unless it breaks high day, and then that'll be my stop. So you're still green on the day, but you're maximizing, the profit potential there. Mark Douglas had this really famous quote. I use it all the time. He said, always keep your rules very rigid, but allow for your trading to be flexible. Your trading can be flexible, but have rigid rules. And what I take from that is, I don't have to have a stop necessarily at bottom support or high day, because we've all seen fake out breakouts. We've all seen stocks that end up breaking high day, but then they retrace that move immediately. So allow for some flexibility, and that's why I do the quarter position sizes to start with, and I allow for the stock to move against me. I look at the daily chart and see where resistance is, but I allow for some room for it to go a little bit over it, maybe just a little bit under it, but still being very rigid with the rules and the max risk. That is 3 times your goal for each individual day. So let's keep going, guys. No revenge trading. I really don't have a problem with that, but I added it up here because I used to struggle with it, and a lot of people do struggle with it. So number 8 is going to be no revenge trading. That is when you trade a ticker and then you end up losing on it and you want to make that money back, so you either revenge that stock or you revenge another stock. You got to take the ego out of it, guys. When you walk into your office, leave your ego at the door, because your ego does not know how to trade. Your ego does not know how to trade. You know how to trade. And then scale out of winners. Number 9. Now that is my biggest flaw. Number 9 is my biggest flaw. Should be number 1. Over the last 3 years, it's been consistent. I take my winners way too early. And to eliminate that emotion, when I take a partial winner on a stock, it really helps me to just let the winner go. Because I do personally have an ego problem. I want to be right, but you have to want to make money more than you want to be right. So what works for me is taking the winner. Okay, Kevin, you're right. And then allowing the rest of it to work, or stopping out at high day. So that maximizes profit potential. And the last one is no more than 2 losses per ticker. So back in the day, like I said, I don't really struggle with over trading, revenge trading anymore. So I don't really have a problem with this. But yeah, back in the day, I would be trading a ticker for days. I know you don't believe it, but there were days I'd have hundreds of dollars in commissions because I would be revenge trading, over trading a certain ticker. Now, if I take a loss on a ticker, more than 2 trades, and I lose on it, I'm just avoiding the ticker from now on. Because I have been burned, wanting to revenge trade, wanting to get that money back, thinking that ticker had something against me and saying, hey, what are you doing? Can we just like each other? No, just move on to the next one. There's going to be plenty other ones out there. Okay, guys, these are the trading rules. Let me know some of the ones you have developed for yourself. Very interested in that. Please hit that like button, guys. Hit the subscribe button. We'll see you all first thing tomorrow.